Reliance Communication is the other one where numbers are lagging its peers, but we'll try and talk more about the numbers with Gurdeep Singh, President and CEO of Wireless Business, now joined us. Hi Mr. Singh, thanks so much for joining us. First, to touch upon the revenue per minute. For you all, it's gone up by 4% on a sequential basis. Your peers as well have reported an RPM improvement. What can we expect now from the industry with respect to further RPM improvement?
Let me first share with you the highlights of the Q1. This has been a highly satisfying quarterly performance coming on the back of a very robust wireless business growth. Our wireless business revenues grew by 4.1% quarter-on-quarter and now stands at 4,816 crores. Our EBITDA of wireless segment also grew by 6.6% quarter-on-quarter and now stands at rupees 1,314 crores. This has been one of the highest revenue and EBITDA growth in a given quarter for wireless segment in the past 3 years. What is even more significant is that our growth engine, which we identified as GSM and data part of the wireless business, now constitutes over 67% to wireless revenues. It is up from being 64% in the previous quarter. This part of the business segment, which is GSM and data, has grown 6.3% quarter-on-quarter, coming largely on the back of our spectrum-led go-to-market strategy, which is beginning to bear fruit. It is not out of the place for me to mention, this is our third consecutive quarter of wireless revenue growth in this year. Our RPM has also grown from 44 to 45.7 paisa, which is a growth of 4% quarter-on-quarter. It's the highest in the industry and it continues to be the highest for the last 13 consecutive quarters. This is coming largely on the back of that RComm took the leadership in raising headline tariffs in October 2012 and also started eliminating free and promotional minutes in April 2013, and that journey continues. We are at this moment extremely focused on improving the contributions from paid and profitable minutes to our overall minutes consumed on the network.
Okay.
Our non-voice revenue has also grown from 21% to 20%.
Okay, we should focus to another key concern is that volumes for, in this quarter have come in fairly flat, Mr. Singh, compared to your peers, at least who've reported some sort of an increase. Is it because that perhaps you'll have, the RPMs have gone up and that is having its effect on the volumes, that volumes have been on the flatter side? And what can you guide with respect to volumes going forward?
Our focus increasingly is on to increase the paid and profitable minutes consumed on our network, and to that extent we will continue that journey till we reach a good customer and a revenue mix of the subscriber using our network.
Okay, let me shift to something else, Mr. Singh. When will the company book revenues from that one-time fiber optic deal with Reliance Jio? Should we see it in the current quarter, September quarter?
Well, our deliveries to Reliance Jio with respect to optic fiber and the towers being leased out has begun. Pre-delivery work is in progress, and given the confidential nature of the agreement between us and the Jio, we will not be able to share how much has been delivered and how much has been booked, because this would amount to giving a lot of information to competition.
Okay, well, let me approach the issue in another way. Since you have taken steps to reduce the debt on your books through this optic fiber deal, the tower sharing deal, can you update us on the debt on your books? How much has it come down by? Where does it stand?
In the last quarter, our debt has come down by over 400 crores, and our efforts to deleverage the balance sheet continues. And as you are aware that we are in advanced discussion for a possible stake sale of Globalcom, and some of the benefits of the Reliance Jio agreement on optic fiber and the towers will come during the year as we are preparing ourselves to hand over the entire fiber and the towers to them during this fiscal year.
So when will all the other efforts, something like a stake sale in, Globalcom, fructify, and overall, what would the debt figures of the company look like at the end of FY14?
Well, we continue to be free cash flow positive, and as you would have seen from our previous statements, we are intensely focused on deleveraging the RComm's balance sheet. So as and when some of those initiatives conclude, we'll be happy to share with you.
All right. Mr. Singh, also the company very recently had undertaken the real estate monetization. Any benefit of that which will accrue to Reliance Communication per se?
As we said in the press release at the time of real estate announcement, that a committee has been formed which is working on the contours of the same, and an update will be provided as and when we are ready with this.
Your global enterprise unit margins have fallen in the quarter gone by. Any reason?
I would say this is seasonal, and we are very confident that this will be fully made up during the year.
Is there pricing power that is now back on the table for major telecoms? Is that set to continue?
Well, answer to that is yes, and if you see the RPM trajectory, it is clearly reflective of the fact that the hyper-competitive stage is over. There is a far more rational behavior on the ground, and the pricing power is back to the pan-India scale operators. And I see the RPM hardening as a journey, and we see in the coming quarters the RPMs will continue to get better and better, particularly as and when an occasion arises because of the rise in the input cost of materials. We see no reason why that will not be passed on to the customers.
Anytime soon, is the company considering any kind of a base tariff increase? If you could just tell us the quantum or the timeline of it.
Well, there is no definitive time or an event or an amount in mind to move the rate per minute. Our objective is to grow paid and profitable minutes. Our objective is to acquire more and more customers and give them delivery of the superior network experience in line with the cost to serve. So I would say that the time has come that there is no room for us to accommodate customers who are below cost to serve or cross-subsidize between winning segments and losing segments. So each segment needs to stand on its own. Hence, the focus on profitable growth will continue.
Okay, Singh, so Mr. Singh, we'll leave it at that. Since the focus of the company has been on profitable, growth, could you help us with some sort of a guidance with respect to margins? How much further can they improve?
Well, we are getting into the festival seasons starting August, and we should see a good run-up into the telecom business. And it should, coming on the back of the hardened RPM, we continue to believe that there should be a good rebound to revenue and profitability in the future.
All right, Mr. Singh, thanks so much for taking the time out and joining us. That's the word coming through on Reliance Communication. They expect the revenue per minute to harden for the industry going forward, and their debt deleveraging plans are very much on. They've managed to reduce it by 400 crores, but other measures like, a stake sale in Globalcom, etc., is on the cards, and the company is looking to deleverage it. Stock is now flat.
No, but even after that,